Welcome to Explain the Charts, your go-to channel for in-depth analysis of financial markets and charting patterns. Today, we're taking a look at Microsoft stock, and analyzing the latest news and events to see how they're impacting the price action. Recent news headlines suggest that Microsoft is facing some challenges, with reports of a slowdown in Azure cloud computing revenue and a rotation out of big tech. Analysts are pointing to a potential decline in Microsoft stock, with the stock currently trading 11% off its peak. Let's jump into the daily chart and see what the data is telling us. On the one-day chart, we see a clear downtrend in MSFT's price, with a series of lower highs and lower lows over the past few months. The stock has been struggling to break above the $340 to $350 resistance zone, indicating that the bears are currently in control. We can also see that the volume has been decreasing, which could suggest a lack of conviction in the market. This downtrend is consistent with the news we discussed earlier, suggesting that the market is becoming increasingly bearish on Microsoft. Let's take a look at the hourly chart to get a better understanding of the short-term price action. Zooming in on the 1-hour chart, we see a more volatile price movement, with numerous swings in both directions. While the overall trend remains bearish, there are some short-term rallies that could offer opportunities for day traders. Keep an eye on the $420 to $430 support level, as this area has been holding the stock from further decline. A break below this level could signal further weakness, while a break above the $440 to $450 resistance zone would indicate a potential shift in sentiment. Looking at the 15-minute chart, we can see the most recent price action in detail. Over the past few days, the stock has been consolidating between the $415 and $425 price levels. This sideways movement suggests indecision in the market, with neither the bulls nor the bears having a clear edge. Traders will be looking for a breakout in either direction to establish a clear trading strategy. A break above $425 could signal a short-term rally, while a break below $415 would suggest a continued decline. To get a better sense of the recent volatility, let's focus on the past week's price action on the 1-hour chart. We see that the stock has been trading in a tight range, with little movement in either direction. This suggests that the market is waiting for a catalyst to trigger a significant move. Keep an eye on the volume, as an increase in volume could suggest that a breakout is imminent. If the volume remains low, it could suggest that the consolidation is likely to continue. Let's recap the important price levels we've identified. On the daily chart, the $340 to $350 price range acts as resistance, while on the 1-hour chart, we're watching the $420 to $430 support level. A break below $420 could lead to a further decline, while a break above $440 to $450 would suggest a shift in sentiment towards bullishness. On the 15-minute chart, the $415 and $425 price levels are key levels to watch. A breakout above $425 could signal a short-term rally, while a break below $415 suggests a continued decline. The likelihood of these price levels being reached depends on several factors, including the release of any news or economic data that could impact the tech sector. A positive earnings report or a positive announcement on Microsoft's AI initiatives could boost the stock, while negative news regarding the economy or Microsoft's business could push it lower. Overall, the market sentiment towards Microsoft remains bearish, but there are some short-term opportunities for traders to capitalize on. It's crucial to be aware of the risks and to manage your positions accordingly. Stay tuned for future videos where we'll continue to monitor the Microsoft price action and provide updates on the market trends. Happy trading!